All right, touch base with another management earnings heavy. Really, the show is this morning, but for us, Techno Electric disappointing fourth quarter numbers coming in yesterday from the engineering construction company. Both sales and net income were down. The expectation is whether this performance is an aberration, or are we going to be seeing pressure in the coming quarters as well. We are joined by the managing director of the company, Mr. Prakash Gupta. To give us more details on what the future looks like. Mr. Gupta, good morning and thanks for taking the time out. What's your sense about the decline of the company's performance on PAT as well as sales? What factors led to this decline, and do you think these factors are sustainable?
You see, this decline is mainly on account of reduction in other income and interest outgo. If you look on EBITDA, there is a growth of about 15%. On a standalone basis, but the other income went down by almost 50%, and also the interest outgo is higher by about 25% in the standalone results. This is primarily because we are focused on our two growth projects which are getting commissioned this year. One is this 100 megawatt additional wind power project, out of which we have already commissioned 30 megawatt and balance will be commissioned by June end. And another is the 1500 MVA transmission link we are building in the Haryana, where we have invested about 39 crore in the equity. So these investments had pressure last year, which will bring upside in the current year.
When do these two projects come online? I mean, which quarter do they get executed or get commissioned? And how much would they contribute to your sales and profits for FY12 then?
Yeah, you see, the wind power project will be commissioned by June end. So it will have the full wind season available to us from second quarter onwards. And this will have an upside of 80 crore of revenue on the energy sale, which we saw last year about 67-68 crore. This year it will grow to 150 crore. The other project is our transmission project that will be commissioned by November, December. But we are only 49% holder of equity in that company. So as such, it won't be a part of our consolidated balance sheet, except the dividend income from there.
Gupta, good morning, Neeraj Shah here. Speaking to a few market people, and they were talking about the ambitious plans you have with regards to expansion into the current line of business as well as non-conventional energy.
Right.
Would there be any equity fund requirement for the same over the next 12 months?
Really not, because we are able to meet out of our internal resources. But definitely for this phase of expansion, we don't need any support. But next phase of expansion, which we intend launching in January, we'll need some support from the equity market.
How much would that support be, and what kind of equity infusion are you looking at?
We will be looking for another expansion of 100 megawatt, which we talked earlier also on your channel, that it will be addition of 100 megawatt a year, more or less, for first 3 years, thereafter growing to 200 megawatt a year. The support requirement will be about $25 million every year over next 3 years.
Are you going to be looking at this fund infusion this year itself, which means an equity issuance perhaps this year itself?
No. This year, by the time we start talking to the funds and fund actually flow in, it may be first quarter of 12-13.
Right.
Just one final, Mr. Gupta. Targets for FY12, revenues and profit after tax, you've already given. For the next year also, you would believe that would be the kind of growth rate that you would target?
Yeah, we should be targeting a growth of about 25% overall in the company. And the bottom line should improve by about 35 to 40%.
All right, Mr. Gupta, leave it at that. Thanks so much for joining us and giving us that perspective.
Thank you.
We'll take a quick break and come back with an exclusive piece of news on a software company. ArcelorMittal Q1 sales flashing on your screen. We'll dissect those as well in this one.